Too many indicators can be so confusing. This is what I call chart overload. And do we really need to have so many indicators on our chart? Did you know that many indicators actually show us basically the same thing? Today, let's talk about how many indicators is too many and how to choose the right one to trade for beginner traders and during different market conditions. My friends, don't forget to make sure that you are subscribed, give this video a thumbs up, and ring on the notifications bell. Likewise, I do hope to see all of you on our social networks. My name is Angie. Welcome to Olymp Trade. Let's start by opening a few trades. I will explain them a little bit more in detail as we go along. Here on the top, I do have a split screen. On the top, I have Forex. I'm looking at the pair Australian dollar and the Swiss franc. And I'm looking at a potential mini trend reversal. Here I'm looking at the 4-hour time frame, so a higher time frame, and this is going to be my potential target, my first target, and potentially even higher here. But this is going to be my first target. I'm going to open a trade for $200 with a 200 multiplier to the upside. On the bottom, my friends, I have FTT, fixed time trading. As you can see, we do have a range. The price is moving sideways. I do have my RSI, and I am seeing that the price is bouncing from resistance, and therefore I'm going to open a trade for $100, and my trade duration is going to be an hour and a half because I'm looking at the 30-minute time frame, and we are going to trade down. Now, my friends, what are indicators for? And this may sound like a silly question, but actually different technical indicators belong to, I guess we can say, different families, and they are used at different times and show us different things. And so indicators can help us do a few things. They can help us identify the direction and the strength of the trend. Another thing that they can do is they can help us identify levels of support and resistance. So I do have a few examples here. So for identifying a trend, we have our moving averages, we have the parabolic SAR, the MACD, the ADX will show you the strength of the trend, the Ichimoku cloud, and of course there are a lot more. For support and resistance areas, we can also use the moving average, the Ichimoku cloud, the Fibonacci retracement, trend lines, and horizontal lines. And indicators, they also help us identify entry and exit points. Where are we going to enter our trades and where are we going to close our trades? Where are our targets? For these, for our entry and exit points, likewise, we can use Fibonacci, the parabolic SAR reversals, moving averages crosses, and so forth. So you see, my friends, first it's important to understand and to realize what it is that you need. What kind of trader are you? The thing is that beginner traders, they always ask, what is the best indicator to trade with to form the perfect strategy so that I can become rich? My friends, there is no perfect indicator. There is no 100 winning strategy, no holy grail. So I would advise for you guys to stop looking for it and remember that we are all individuals. We have different trading styles. We have different lives. We have different approaches to risk tolerance and also different goals. Realizing and accepting this is the right step to a successful future. You see that some traders, they look for a mid to long-term perspectives. They are interested in entering a trade and holding it open for a prolonged period of time because they make profit on the price differences from where they open and from where the price is going to reach. So basically, this is from my example on my Forex trade. So what I'm looking for at a 4-hour time frame. So each candle is showing me how the price changed each 4 hours. So that's a long period of time. And even this price target right here is going to be far away because, you know, these are 4 hours, 4 hours, 4 hours. So I do need some more time for this trade. Versus here on the flip side, I have my FTT trade. Here, some traders, they actually prefer to trade on shorter time spans and make profit on small price fluctuations. And so basically here we can see that we are leaving the area of resistance. The price was in the oversold area, and my trade duration, I'm looking at the 30-minute time frame. So this is how much the price changes every 30 minutes. And my trade duration is going to close in an hour and a half. Now, why did I enter these trades and how did I choose my indicators? This is a good question. Good question, because indicators, they are divided into two main parts. We have trend indicators, and we also have oscillators that are more, they are also referred to as momentum indicators. Trend indicators are going to help us identify, as I already mentioned, the direction of the trend and the strength of the trend, as well as reversal points. Now, some popular trend indicators are, for example, moving averages, as we can see on our chart right now. A few things that I want to mention when we're looking at the moving averages: the bigger the angle, of the moving average pointing down or pointing up, the stronger the trend. And my friends, another thing that I want to mention is that if you are using more than one moving average on your chart and they have different periods, as we can see here, I have the 10 EMA, 50 EMA, 100 EMA, and 200 EMA from short period to the long period. The further away that the moving averages are from each other, the more spread out they are with distance between them, the stronger the trend. And I do want to mention, my friends, that during a flat, a non-trending market, when the price is moving sideways, the moving averages, as you can see, are most often going to be intertwined with the price chart. Now, my friends, another popular trend indicator combo, actually is the one that I used for my analysis, is the MACD and the parabolic SAR, along with the exponential moving average. Across of the MACD and the shift of the parabolic SAR, as we can see here, as well as here, will show us trend reversal points. These areas can be used actually for entry points, and likewise for exit points for previously opened trades on the previous trend. Remember, what you want to remember is that when the moving averages on the MACD, whenever they are spread out from each other, whenever they are far away from each other, and the parabolic SAR is far away from the price, we have a strong trend. Now, when the lines start approaching each other on the MACD, and likewise, whenever the parabolic SAR is getting near the price chart, this means that the movement is losing momentum. And similarly with the moving average during a flat, my friends, as we can see right here, non-trending market, the MACD lines are going to be continually intertwined. And likewise, we're going to see the parabolic SAR is going to be practically right on top and right below the price chart. Therefore, these indicators are not the best choice during a ranging market conditions. And so now looking back at our trades, looking at the MACD professional trading strategy that I just told you about, this is what we're observing right here. The price has broken above our exponential moving average. The parabolic SAR has reversed. It is below the price chart. And likewise, the MACD, we have a cross on the MACD, and the first bullish histogram has appeared. This is why I based my decision to enter a buy trade on the Australian dollar and the Swiss franc. Here on the bottom is where I was trading more in a range on FTT, fixed time trading. And basically, what you can see is I have identified my levels of resistance and support. As you can see, the price has been ranging between these levels for quite some time now, but I am looking, remember, at the 30-minute time frame. By the way, if you need help identifying levels of support and resistance, you can actually use a tool called the Bill Williams fractals, which show you the highest highs and the lowest lows. You can find them in the indicators. Let's just scroll down a little bit. Bill Williams fractals, just a brief second. Bill Williams fractals right here. And if you apply them to your chart, they are going to show you highest highs and lowest lows. So basically, if you need any help identifying levels of support and resistance, you can use this tool as well. So during a ranging market, oscillators work very well. They identify overbought and oversold areas where the price is too high to attract more buyers or too low to attract more sellers. Whenever the price is coming back from these areas, coming back down from the overbought area, or coming up from the oversold area, this can serve as an entry point. For this, my friends, you can use different oscillators. You can take your pick. You can choose the RSI oscillator. You can also choose the CCI oscillator, or maybe even perhaps the Williams percentage R. My friends, as a matter of fact, if you combine these three oscillators, the RSI, CCI, and Williams percentage R, and if you change the settings of the RSI a little bit, this is actually called the trio strategy. And you can check this video out for more information on that strategy. My friends, the thing with too many indicators is that it clutters the chart, which can cause confusion, wrong price interpretation, because some indicators may cancel each other out and may lead to trading mistakes. This is what's called paralysis of analysis. So do try to minimize your indicators, your indicator amount to 2 or 3, depending on your needs and your trading strategy. For example, like price action traders, they rely on support and resistance levels along with candlestick patterns, and they may not even need an indicator other than maybe perhaps a moving average. While on the flip side, there are traders that really need more data to base their trading decisions. By the way, my friends, there is a fabulous indicator, one of my favorites. One indicator packed with loads of information. Yep, that's right. That's my favorite Ichimoku cloud. It's really not that hard to. It's really not as hard to use as it seems. So you definitely want to check this video out if you're a data lover and you really, really like indicators. Enjoy. My friends, here are a few tips when you are choosing indicators to trade with. Once again, like I mentioned, you do want to keep them to a minimum, 2 to 3 maximum. When you find a combination of indicators, a strategy that works well for you, if you experience losses, don't rush to add and switch indicators. Analyze the situation and make sure that this isn't simply a passing trading moment. Likewise, I do want to mention that you want to avoid using multiple indicators that are from the same category, which in essence show the same thing. So you want to mix trend indicators with momentum indicators like oscillators. Dear traders, thank you so much for tuning in. I do certainly hope that you learned something new and that this information is going to help you in trading. Subscribe to our YouTube channel, and if you enjoyed my lesson, please let me know by leaving me a like and of course ring on the notifications bell. Make sure to visit our social networks. Likewise, we have Facebook, we have Instagram, and of course we are on YouTube. I'll be seeing you next time. Thanks so much.